It may sound very enticing to get paid in crypto, whether that's your wage, whether it's payments through a DAO, or whether it's in the course of your business. But it's really important that you understand the tax implications of that, and I'm going to go through that for you today. Hello everyone, my name is Ethan Rushock, and today we're going to be talking about getting paid in crypto. So I've had quite a few clients or potential clients come to me and go, oh, I'm getting my wage in crypto, or I'm now working for a DAO, or my business gets paid in crypto. And they have a bit of an understanding, but get very confused as to the real finer implications of how does that actually work from a tax point of view. Now, the first thing I do want to cover that no matter what, however you get paid, you're going to pay tax on it. Just because you've received the payments in crypto definitely doesn't mean it's tax-free. So because of that, you definitely need to understand, well, how does it actually work from a tax point of view so that you don't end up causing a massive mess when it comes to tracking all of this. Now, before I jump into the real details of this, if you do have questions like this, I do now have a Discord, the Rushock's Discord. So I'm answering a bunch of tax related questions and other people from the community are jumping and helping out. And I'm also talking about my upcoming NFT project, Rushocks. Rushocks is a project that I'm so excited to launch, and I think it's a project that will give so many of the viewers here on YouTube real value. So make sure you go and check that out and ask questions in there. Anyway, back into the video. So let's first cover someone that, say, gets their wage paid in crypto. That might sound like a great idea. They go, oh, I'm going to get paid in Bitcoin or Ethereum or whatever it ends up being, because the company I work for, that's what they mainly deal with. But it does cause a lot of issues if you don't get things right. And that obviously is going to come from a company point of view. They need to have their records right. But it is also your obligation to make sure you have an understanding of how you're going to be taxed. Now, the ATO do have one thing on their website about this, so I'll bring that one up. And it pretty much says where an employee has a valid salary sacrifice arrangement with their employer to receive crypto instead of Australian dollars, the payment of crypto is a fringe benefit and the employer is subject to the provisions of the fringe benefits tax assessment. Now, as soon as you're starting to talk about fringe benefits, things get pretty complex, but then the ATO do have this line further down that pretty much says, in the absence of a valid salary sacrifice agreement, the employer is considered to have derived their normal salary or wages, and the employer will need to meet their pay-as-you-go obligations on the Australian dollar value of the cryptocurrency. An example of this is where the employer has already earned their salary or wages and then asked to be paid in cryptocurrency instead. So we've got a couple different ways there. Is that it's going to be a fringe benefit if you're getting paid crypto on a regular basis. It's a salary sacrifice agreement, so you're earning your money, but you're getting maybe a portion of that paid out in crypto. Salary sacrificing and fringe benefits can get pretty complex. I'm not going to go through it in detail here, but you definitely want to make sure you and the employer has all of this set up correctly. And then the other side is where you're then going, oh, well, this is what I've earned. I've earned $1,000 and that's my net pay is $750 and I want that paid in crypto, and you ask your employer to pay that. At the end of the day, you're still going to pay tax in the same amount. So you want to ask yourself, well, is it easier for me just to get paid in Australian dollars and then go acquire the crypto as I want, and I can go purchase whatever I want, when I want, when the market suits? So I think you do really want to ask your question of, well, what are the actual benefits to me getting paid in crypto? Because if you're only going to get paid the same as what you would have got in Australian dollars, you're probably better off to get it in Australian dollars and then do what you want with your money rather than being forced into only using a certain currency. Now, the next part I want to touch on quickly, and it's only because I'm starting to get asked this question and it's still such a new area and there's not the information out there, I'm still trying to do my own research in it, is people that are working for a DAO. So a DAO is a decentralized autonomous organization, and quite often they will make payments in crypto or in whatever runs their DAO, their token that runs their DAO. So it can get pretty complex because a lot of these, well, they're definitely not set up in Australia yet. We don't have a DAO organization. There is talks about having that as an actual structure, which will make this a lot simpler. But at the moment, that's just simply not there. So my advice to anyone that is working for a DAO or getting payments from a DAO, you really want to have a good understanding of, well, how are you actually getting paid, because some will get paid a portion in crypto and maybe a portion in a token. So you really want to have an understanding of that. And the basics are is you're going to need to be converting this back to Australian dollars at the time you're receiving it. No different to what if you would happen if you're receiving a wage. This can get pretty complex with trying to value those tokens, etc. So you really want to keep on top of your record keeping so you have an understanding of, well, what have I earned in Australian dollars throughout the year? And then you'll need to have an understanding of what have I done with those assets I've received And is that going to be another taxing event? Are they held as trading stock, etc.? It's just going to depend on how you're set up and how often and how you're receiving these payments. And then the final one I want to talk about is crypto within a business. So if your business gets paid in crypto or you make payments in crypto, you need to have an understanding of how does that work from a tax point of view. Now we do have two different types of businesses here. So we've got cryptocurrency businesses and then businesses that use crypto for business transactions. Now cryptocurrency businesses are things such as a crypto mining business, a crypto trading business, or even a crypto ATM. So these businesses have to treat the crypto as trading stock. So there's a couple different ways you can value trading stock, but the most common way is that when they receive it, it will be income, or if they're spending crypto, that'll be an expense. But then they revalue their trading stock, so their crypto, at 30th of June, and that gives them a closing stock value. So a quick example, and a real basic one, is where you say you get $2,000 worth of crypto mining revenue in April, nothing else happens throughout the year, but that's grown, now that's worth $3,000 at the end of the year. So that $3,000 will become your total taxable income, because we're going to have the $2,000 of income, we're going to have the closing stock, which is going to be adjusted, and that's going to get us up to $3,000. So you're going to pay tax on unrealized gains, not just under the CGT method, because that won't exist because you're using it as trading stock. And then the other option is for businesses that transact in cryptocurrency, and that will be someone that receives a cryptocurrency payment for one of their invoices, or maybe they pay someone in cryptocurrency, and that all needs to be converted back to Australian dollars. Now this can get pretty complex if you're not keeping on top of it throughout the year, because crypto isn't necessarily integrated into accounting software such as Xero, etc. So you may need to either be keeping manual spreadsheets. You could use a crypto tax software. So I've done a review of, say, crypto tax calculator, which might help. But then you're obviously going to have to be making sure you're marking these transactions correctly, because you need to be converting each of these transactions back into Australian dollars when they happen. And then you're potentially going to have further tax implications of that crypto, because if you're holding it, well then it may become a CGT asset, it could become trading stock like we talked about in the previous example. So you're going to have an understanding of, well, what happens when I receive it, that initial taxing point, and then is there a second taxing point if I'm not disposing of it straight away? You need to go, well, what's happening with it from there until the time that I do dispose of it? It's all about keeping records with this. Keep records, keep on top of it, because otherwise if you leave it all to the end of the year and go to your accountant, they'll either turn you away or you end up with a massive bill. So definitely make your life easier, make their life easier, and it will save you on costs. If you do have further questions about using crypto within a business or getting paid in crypto, either leave them in the YouTube comments or preferably head over to the Discord, ask in there, we can jump into a real conversation about it. Make sure you've hit that like button, hit subscribe, check out some other content. I thank you for watching, and I'll talk to you again soon.